After a year-long wait, gold is once again shining and shining bright. The prices of precious metal touched a lifetime high of 60,100 rupees per 10 gram in New Delhi yesterday, and strong global trends, festive season, global volatility are the reasons for it. Since achieving the feat, however, gold prices have corrected marginally and are currently trading at 59,000 mark. Year to date, the yellow metal has surged about 8%, outpacing Nifty, which has given negative returns of 5% in 2023. With the US to Europe banking crisis already firing safe havens, buying on all cylinders, gold seems to have upward momentum on its side. Joining us in the newsroom is my colleague Kartik Malhotra. Also joining us very shortly is Anuj Gupta. Kartik, I want to come to you first. What's driving the interest in gold?
Very interesting question, Shweta. And often one tries to believe that gold has an inverse relationship with stock prices, and gold also has an inverse relationship with interest rates. So in a typical scenario, when you see interest rates rising, you see gold sort of, not rising in equal measure, if anything, falling down. So it's an interesting situation to be in. Now, what we have seen of late, of course, is the fact that gold has reached the 60,000 level, and it has slightly come below that, as you mentioned. But if you look at returns over, let's say, a 5-year, 10-year, 15-year horizon, over the last 5 years, and maybe we can have graphics also, as I read out these numbers, over a 5-year scenario, gold has given a CAGR return of about 15.15% versus Nifty giving a return of 10% in the same period. Over a 10-year horizon, gold has given lesser returns than Nifty at 6.87 versus Nifty giving 11.15. And over a 15-year period, gold has given a return of about 12.16% versus Nifty at about 7.02%. Now, this becomes relevant today because we are in a high interest rate cycle. And at the same time, globally, markets are not doing too well. So I think the question really to understand and ask here is that are we in a situation where gold has once again proven to be the safe haven when markets are dwindling? We've seen the collapse of SVB and the whole banking crisis, which hasn't yet turned into a catastrophe, but we've seen a crisis which has led to markets bleed. Is that the real trigger for the yellow metal to shine? I think that is what we need to explore.
Okay. Anuj is joining us. Anuj Gupta is the Vice President of IIFL Securities. Anuj, thanks very much for taking time out. I want to come to you with the same question. What exactly is driving interest in gold? As Kartik mentioned, it appears that gold is once again a safe haven.
Exactly. Safe haven demand is always, drive the gold prices. If you check it, gold since 2008, when we saw the recession, and at that point of time, we saw that gold increased by, 28%. And after that, 2008 till 2014, it gives a return in 2 digits. So, historically, we saw that gold giving a result, giving a positive return at the time of uncertainty and at the time of, the slowdown in the economy. The recession we have seen, and it's proved that whenever we saw any kind of disruption in economy, disruption in financial market, disruption in geopolitical tension, gold gave a return. And if you see from year 2019, where we had the corona pandemic, at that point of time, even gold given a 2-digit kind of return. So in last 4 years, we have seen that gold increase tremendously, and right now in this year, if we talk about 2023, it's give almost 10% kind of return. So gold is a product which is, hedge against inflation, hedge against uncertainty, and definitely it is a safe haven when we talk about any financial crisis. In 2008, we saw Lehman crisis, and right now we are seeing a banking crisis. So crises both are just like a same kind of thing, financial crisis. And at that point of time, we have seen gold increase sharply.
Okay. So is investing in gold a good idea at this point in time, or should one wait for price correction?
As we are seeing that this banking crisis is still remain in the economy, and definitely we are just 1 day prior before the FOMC meeting, and we are expecting some kind of relaxation, some kind of kind of program or some kind of fundraising program by the FOMC, and also we are expecting that their interest rate kind of thing maybe peak out. So still gold is looking positive because US economy again in kind of slowdown because.
Okay. It feels like we've lost Amit at this point in time. Karthik, Fed rate hike decision likely to impact gold. How cautious should one be?
So Shweta, I believe that that usually, the inverse relationship, and that is what I wanted to sort of ask Anuj before we lost him. The inverse relationship is usually true. What happens is, in a high interest rate scenario, you find out the fact that you understand that gold becomes a safe haven when interest rates are low. Right now, in a high interest rate regime, there is a better likelihood of somebody investing in investing in fixed deposits, which are sure to give you assured returns, which are of course going to be higher than any other risky asset, whether it is stocks or any other commodity. So in a high interest rate scenario, people usually go in for government-backed securities like fixed deposits and not as much for the yellow metal. So I think what has really happened this time around, of course, we've seen the interest rate rise for the last 1 year, and Anuj had just mentioned the FOMC tomorrow, and we think that there is going to be a 25 basis point hike yet again. However, if you look at gold for the last 6 months, it has more or less been flat. We've just seen this spike suddenly from last week, which I think is not directly correlated to high interest rates, because prices had been stagnant, range bound for almost 2 years now. I think the last spike we saw was between March 2020 to November 2020. Those 6 months where we saw every 10 grams of gold prices shoot up from about 43,000 rupees all the way to 53,000 rupees. That's the kind of sharp, steep sort of, line we saw on the graph on gold. However, I think for the last 2 years, the gold rates have been more or less range bound. Specifically for the last 1 year, they've been in the range of about 53 to 58,000 or so. So I think this sudden spike doesn't have as much to do with interest rate hikes as to do with stock markets not taking the pressure of banks sort of going down every now and then. But I think Anuj is back with us. Anuj may be able to enlighten us. Anuj, usually gold has got an inverse relationship with interest rates. In a high interest rate regime, you see gold prices go down. But for once, we have seen that while consecutively there has been a rate hike, over the last 2 weeks or so, gold prices have also gone up. So why is this contradiction to the inverse relationship between gold and interest rates?
When we saw a relationship between the US dollar and the interest rate. So here FOMC, I think we can say that FOMC or Federal Bank is not able to judge the inflation correctly, because inflation is basically that driven from the nature. But right now here the inflation, or we can say that the slowdown is made by the man, because Russia-Ukraine war is the basic thing which is lead the inflation kind of thing. So here in a single year, FOMC increased interest by almost 5%, where all the central banks are not in such kind of hawkish statement. So FOMC, I think, not able to judge the predict the inflation which is laid in the US market. So right now we have seen that in a one basket we saw the US. Other buyer we have seen whenever they increase the interest rate, all the asset class were falling. So in the month of February 2023, we saw that gold made a high of 58,000 and again made a low of 54,000. But right now, whenever the banking crisis, seeing gold prices increase from the lower levels till made a new lifetime high. So definitely inverse relationship is there, but still we are saying that gold is a product which is investment product against the uncertainty and also again the opportunity of the investment. So as people are seeing that central banks are buying gold, we have seen the last year China also bought gold last year, central banks has also bought gold last year. So people are also seeing in that way also that whenever when central banks are increasing or adding gold in their portfolio, so why not individual add gold as in the portfolio? So as an investment also as against the the interest rate. So gold is a product which is working in the both side. It also increase their investment demand also, and also it increase their safe haven demand also. So here we are seeing that in a both way gold adding shine in the consumer's portfolio.
Okay. One of the big debates over the last few years, Karthik, has been, should one buy physical gold or invest in paper gold through gold exchanges, sovereign gold bond? What's your take? Some of the key associated risks with both physical and gold bonds, if you could highlight for the benefit of our viewers.
Shweta, I'm not really, an expert, and I'd rather refrain from giving advice on whether or not to invest in gold. But I think if somebody has taken the decision that yes, gold needs to be part of her or his portfolio, I feel sovereign gold bonds is definitely a great option. Why is it a great option? It's a great option, A, because you're not worried about the authenticity, quality, hallmarking of the gold, right? It comes with a sovereign guarantee. Secondly, if you think that since you've made the investment and you've decided to go for a gold investment one way or another, I think the underlying assumption is that gold prices are going to rise over a period of time. Now, along with the appreciation of the price of the yellow metal, what sovereign gold bonds also give you is a 2.5% annual interest over and above whatever the appreciation has been in the gold prices. The third advantage being that the returns on the sovereign gold bonds, if you sort of fulfill the entire tenure of holding it for 8 years, the returns are completely tax-free. This compared to, let's say, physical gold, there is obviously always a risk of safekeeping, there's a risk of quality, purity, etc. And at the same time, when you go and resell it, even if rates have fluctuated and your investment hasn't really paid off great dividends, at least the 2.5% interest rate in the case of sovereign gold bonds will make sure that you don't lose too much money.
Okay.
But I think Anuj might be able to answer that better. Anuj?
See, in the general market, there are many products are available in the gold side. Definitely, physical gold is available, which is very fascinating. Every customer, including man, women, and even child also. But if we talk about the investment side, so definitely gold ETF is there. Sovereign gold bond, which is very fascinating the customers, and we have seen a very huge investment in the sovereign gold bond in terms of money because it gives a guaranteed return kind of return, and it is also backed by the Indian government. So that's people are investing in the sovereign gold bond, and definitely MCX gold, which is very fascinating the traders who wants to trade, who want to catch up daily momentum in the gold prices. So every customer has a different product, and in the market we have a different product on the basis of the customer. So if a customer want to do trading, there is a MCX gold where he wants to trade in option trading and future trading. But if somebody wants to get investment for a longer period kind of thing, 5 to 7 years, so definitely SGB is there, sovereign gold bond. If somebody wants to hold gold in their demat account, so there is a gold ETF is also. And if somebody wants to buy a gold for their physical use or physical investment, so there is a physical gold is there. So gold definitely is a product which is available in every denomination, and every it is fulfilling all the desire of every customer. So gold, suppose I think if somebody wants to gold investment for a long term perspective, so definitely he can go for physical gold as well as the sovereign gold bond, where they are getting they will get guaranteed kind of return and even a tax free return.
Okay. Anuj, what's your long-term outlook on gold at this point?
See, I am very optimistic for the gold prices because uncertainty definitely is there, and we already seeing the Russia-Ukraine war is there, and Federal Bank is very very hawkish still looking there, and there is also concern that I think the interest rate of the US maybe peak out, and the unemployment rate again we are expecting increasing due to this banking crisis. So this will give fuel to the gold, and my view, if we talk about till next Diwali, coming Diwali in 2023, gold may test 62,000 to 65,000, and in dollar terms, we are expecting that it may test 2,100 to 2,200 $. So, as far as concern about the demand side, I am very optimistic from the side of central banks because they are adding gold in their portfolio, and I am also expecting that in this year also they will again add gold in their portfolio. So the central bank demand for the gold will increase in this year also, so that will also provide the fuel to the gold. So my view is very optimistic, and I am expecting that gold may trade 62,000 to 65,000 in this year.
Okay, optimistic outlook there on gold. Thanks very much, Anuj, for all those details. Thanks, Karthik, for joining us.